All right, it's Wednesday morning, December 23rd, and I just got out of my Apple trade. You can see here that I swing traded Apple overnight, playing the close, entering there, and getting out early this pre-market. So just to show you on the minute chart here, I was able to get in on Apple at 131.8 yesterday at the close, and my exit was this morning. I got out in the pre-market right around 8:30 or so. You could see it started failing. It is going back up, but considering that the stock was down a lot this morning, I'm happy to cover a little bit of profit, which roughly I covered about 0.5% profit. So not too bad. I'm pretty happy with that. And you can see here that in cash that amounts to about $800, a little bit over, so pretty good considering this was a really slow day. And you can see here that Apple looked pretty good of a swing trade, and you can tell why I decided to swing trade it here. I mean, yesterday I played the green and it gapped up, so I was expecting there to be a big gap this morning. Not as big as I expected, but at least there was somewhat of a gap. And I mean, you can see Apple lately off of these green candles has been gapping up, and when it does not gap up, it barely goes down. I mean, last time it didn't open higher, it opened down like 1/4% or 0.4%, so really not much. And I mean, some of you might see this tail and this doji almost thinking that it looks a little risky, but you can see plenty of times in the past Apple has had this tail and it has gone higher. So, I mean, when I see a tail, I don't really think of it much. I just look at, did the candlestick close higher, did it close lower, and the fact that it closed a little higher yesterday seems that the momentum would probably keep going. So I'm happy with that trade. It is a little bit of a slow morning anyways. So here I got all the indexes, and you can see here this is yesterday's daily, and you can see that Dow Jones, the S&P all closed lower, while the Nasdaq actually hit a new high and started going up. Considering that the Nasdaq is heavier weight in tech stocks and infotech specifically, I really thought that Apple, being one of the stocks in the Nasdaq, would probably start gapping higher. So even though most of the market was looking red yesterday, you might be wondering why I decided to long anything. And it's because I still saw the Nasdaq going higher. Normally, because of these new cases in COVID in Europe, people are freaking out. You would expect the stocks that were going down a lot before, like the Dow Jones industrial stocks, to start going down again. And then the stocks that were doing well, like the Nvidia, Apple, infotech stocks that aren't really affected by a type of a recession like this, would do a lot better. So that's why I wasn't too worried about playing Apple. And I mean, you can see here, this is my swing trading watch list. You can see almost everything yesterday was closing lower, almost all sectors besides, again, infotech. So even though the overall market didn't look too promising, I liked how the index, the NASDAQ index and the infotech sector was looking. So I was happy to long Apple still. And I mean, you can see here that all the stocks I swing trade are very high market cap stocks and very low risk stocks. Most of these stocks people are looking to just invest in, but you know what? You can make a lot of profit swing trading these stocks, looking for just 1 to 2% a day. That's what I do, and through compound interest, I'm building up a lot of profit, as you can see here. So if you want to keep learning what I'm doing, just subscribe below and I'll keep posting.